Hey guys, okay, I told you I wouldn't leave you hanging. I got some more student loan tips for you. I mentioned that student loan repayment is going to begin after January 31st, 2022. So I'm going to give you a tip about how you can anticipate what your exact payment is going to be, because most of you guys should be on some kind of payment plan that is in line with your income and that gets you paid off within a decent period of time, especially if you also are on trying to get the public service loan forgiveness. So what I'm going to do is actually walk you through on the actual website, the loan simulator calculator kind of thing, and tells you based on your particular circumstances what your exact payment will be. So let's jump right over to the website and we'll get right into it.
Okay, so you're going to start by going to www.studentaid.gov/loan-simulator/ and it brings up the federal student aid website. And this is the official website of the United States government. It's for loans that are federally backed. So what you're going to do is try to figure out, you can kind of anticipate what your future payments will be and decide whether you need to consolidate your loans to make a better payment for yourself overall. So once you get there, it says, let's get started. If you already have a federally backed loan, you should already have an account with FSA because they're the base of the student loan management, and then they actually outsource the actual servicing to these other loan servicers. So you should already have an account with them, but if not, create an account. So it says, let's get started. You scroll down and you say which one you want to do. You're struggling with the payments. You want to simulate borrowing more, like if I go back to school and have this much more debt, how much will my payments be? Or if you want to figure out which payment program is the best for you. I did a whole video about payment programs and trying to figure out which one fits you best, because they're income-based ones, they're income contingent programs. Find out which one was the best for you so you can actually figure that out. I'm not going to log in for mine because I want you guys to see what will happen if you guys did it. So I'm going to do start from scratch, and they actually ask you some information. So it anticipates saying, okay, these things are happening, or I have these things happening in the future by the time repayments start in January 2022. This is what possibly I can anticipate, and then that will help them figure out what your anticipated payment will be. Okay, so let's go. Let's say you have a job. Let's say you file taxes. Let's say you have children. And let's say you have health insurance payments that pay through your paycheck, right? Continue. You pick your filing status: single, married, filing jointly, married, file separately, head of household. And this is based off of what you actually reported to the IRS, not what you think about yourself, okay? Not what you think about yourself, what your official reporting is. So let's say it's single. Continue. And then what state you live in. Let's just leave it at Alabama. And then how many children you have. Let's say you have 2 children. Any other dependents, if you help anybody else out officially, who you provide support for, your parents, cousin, relatives, whatever. Let's say 0 for this step. Continue. You put your average salary in there, and if you expect your salary to grow. They're asking this question because if you're on an income-based repayment program, it's based on your salary, and if it can change, it kind of gives you a range of what your payments could be, because it would increase if you get paid more, then your payments will be increased as well. So keep that in mind. So let's say the average for $40,000. Oh, too many zeros. If it's okay, we're going to put 5%. Leave that in there. How much do you pay in health insurance premium? Let's say we pay $2,500. And estimate your loan balance. So you can actually use your actual loan balance, or you can do an estimate, put that information in. So let's say use national loan data, put your school in that you did, and have that. This is, like I said, if you start from scratch and you don't have the actual balance. So this is saying, like, you went to a 4-year public school, your average loan balance would be $26,000 with an average interest rate of 3.9. That may not be accurate for your particular situation, but this is giving you an estimate. So continue. You want to see, so we did a whole video, a couple of videos about the public service loan forgiveness program. You want to see the possible options you have if you work in the public sector or a nonprofit, then you can possibly get information about repayment options for that. We're going to say no just for the sake of doing this video because we did a whole video about that. And then it gives you options like, okay, what is your goal? And this is good because some people have different goals. They may say, I just need to have a low payment right now, but I think I can probably pay it off with this lump sum later. So put what's actually, you know, relevant to you. If you want to choose how much you can afford a month, and then they'll say how long it will take you, they'll do that. If you want to pick a time that you want to have to be paid off, like I want to have it paid off by 2025, then they'll tell you what you need to pay in order to have that happen. So let's just say we choose a monthly payment one. A lot of people just say, I can afford this. So let's say you can say $350. View the results. All right, so it comes up. Based on your selections and overall repayment strategy, this is the plan that best fits your budget of $350 a month. We estimate that we found a plan that you can pay $272 a month, and you'll be paying that until 2031. So that's 10 years, right? Off of a balance, let's say the balance is $26,000. So you would have paid $32,000 by that date. That's including interest. So it keeps that in mind. It tells you that. So this is the benefit of doing it this way, because you can kind of get an idea like, okay, this will happen if I do that, and decide whether you can afford more. If you want to pay more, then you can do that. It tells you the advantages or disadvantages, and I think they've designed this so that people won't feel like they weren't informed. You can make an informed decision before you pick your repayment program and figure this out. It tells you that this is not a good option if you're seeking public service loan forgiveness, as you will have either paid off your loans after 120 payments or not qualify at all. So under this plan, you will have it paid off in 10 years if you paid that amount, versus you may be able to qualify for a lower payment under the public service loan forgiveness program. You can pay a lower payment and have the remaining balance forgiven within 10 years. So let's click on this little toggle that says show payment estimated under loan forgiveness. Let's see what it does. Apply changes. All right, so this is the difference. So they give you several options under the public service loan forgiveness repayment program. You have several options, and I go, like I said, over this in the whole video, but this just tells you you can have a monthly payment between $38 and $145, and you will be paying $10,000. It's the same 10 years, but this is what the amount they will forgive for you. That is a big difference, right? You're less coming out your pocket, more forgiven if you do this repay program. There are other options to consider, so keep that in mind, but it basically tells you like these are other options. It may motivate you to go find a job in the public service or a nonprofit, or if you're already working there, to not quit that job, because it can actually save you a lot of money in the long term. So keep that in mind. So I just want to let you know this tool was available. You go to, like I said, the regular FSA website and go to the loan simulator and actually walk through it so that you can see. Remember, payments are going to start after January 31st unless something happens. So kind of get yourself, on the track that this is going to happen. What am I going to do about it so that I can prepare for when it does happen, and I can possibly budget for something that I thought, was not as much as I thought it would be because you did the loan simulator ahead of time. All right, hopefully this video was helpful for those of you who have been like struggling to figure out how they're going to pay back the student loans in the future. The FSA has a lot of different tools. This is based off of our Congress people, some of them really working hard to make sure that our consumers are being made aware of things and are making informed decisions before they get into debt, or once they're in debt, figuring out how they can get out of debt. Similar to kind of how they do with the credit card companies, where if you noticed before in credit card companies on the statements, they used to just say pay this minimum payment and you keep going. Now they would have been forced to tell you, if you pay the minimum payment, this is how long it will take you to pay this balance off. And that was as a result of Congress action to say, like, you need to inform borrowers. They don't know what they're getting into sometimes, and they're basically, this is predatory practices. So similar to that, they're doing similar practices for student loan borrowing, and I think this could be helpful for a lot of you. So let me know if you found this useful, if you wanted me to do more videos about student loan and how you can figure out how to get out of this debt. I'm happy to do so.